Welcome to my channel and this week review of stock markets and stocks in my portfolio. This is the first week of my new investment account, dedicated to a more aggressive swing trading. And I have to admit, it was a nerve-wracking week. But first, let's take a quick look at the broader markets. TSX was down on the week, finishing 0.4% negative. All markets south of the border finished green, with Dow Jones in the lead, following earlier correction. My outlook for the next few weeks remains unchanged, calling for a seasonal summer correction across all markets. The chart for Dow Jones already starting to look bearish, and I think Nasdaq and S&P will form similar pattern by the end of the summer. Especially if investors' mood finally shifts from euphoria to fear in technology sector. My self-managed portfolio fared very similar to TSX, with most stocks barely moving. The only exciting event of the week that I wanted to mention was the announcement on Friday from Fiera Capital about favorable resolution of the uncertainty surrounding recent departure of one of their major shareholders. The markets took the news with excitement, propelling the stock price up 7% in Friday afternoon session. I bought Fiera 2 weeks ago, and talked about it in that week's episode. I think the chart is starting to look quite bullish now. I also added this stock to my new swing trading account after the announcement. And speaking of my new trading account, it was not quite the start I was hoping for. Despite all my trading experience and rational mindset, on some occasions I still find it difficult to resist an emotional impulse buying. This week presented one of those occasions, and unfortunately, I had to pay for listening to my emotions instead of reason. Here is what happened. Last Tuesday, I noticed that one of my holdings, Evertz Technologies, is about to publish their earnings report the next day. The company reported stellar results over the last 2 quarters, and I decided that chances are very high that they beat the expectations again. Since it was very close to the end of the trading day, I made an impulse decision to gamble on the news, and added this company to my trading account, even though technical indicators were not in favor of such decision. Needless to say that the next day, Evertz reported a miss in revenue and earnings, plunging the stock nearly 15% over the following 2 days. As a result, my swing trading account was down 1.9% on the week. Ouch. Luckily, I wasn't entirely neglecting my risk management strategies, opening a smaller position than usual. I am quite sure the stock will recover over my trading horizon of 1 to 3 months. But this event was a good reminder to stick to the plan based on reason, and steer clear of emotional buying. Here is a recap of my lessons learned from this incident. Always stick to the plan. Have a solid plan based on technical and fundamental indicators, and avoid emotional buying at all cost. Never neglect risk management. If you absolutely must gamble on earnings report, start with a smaller position. I'd recommend no more than 50% of your usual allocation. Don't be afraid to sell. If the news are bad, don't be afraid to sell some if not all of your holdings, right at the opening. The price often drops much lower later in the day. Don't lose sight of a big picture. Temporary setbacks in trading are unavoidable. A sound risk management strategy will keep up your spirit to continue enjoying the thrill of the ride. Well, that's all for this week. Hope I was able to share some useful insights. Happy trading, and we'll see you next week.